Morning traders, welcome to the Traders Lab. I'm your host Tom B. Thanks for visiting us today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis to overlay structured trades on. The Trader Lab process is really all about integrating order flow with participant behavior. It's not indicator based. It's really based more on market mechanics, how it works, why it does what it does, and how at times you might get in alignment with it using a structured trade plan. Trading is very much a statistically based business, not a predictive business. We don't know what's going to happen at any moment because every moment's unique, and any participant at any time can come in and disrupt your trade. So if we can accept that we don't have control over the other participants, the only control we have is over ourselves, then potentially the business of trading is more like a gaming process. So it's really about waiting for trades you have vetted that have an edge. And then the outcome of any interaction with the other participants is always random. But if you have an edge, that is a statistical probability. And over time, if you actually have an edge, and you have to do the work, of course, to determine where those edges show up, just like the casinos only play games that have an edge. And even though everything is random, even in their environment, they always play the games exactly the same way. And that's the only way they get to extract their edge. So if we look at a successful business model like gaming, then maybe the key to this business, the trading business, is to use a proven process as a template in order then to build out a business of trading and substitute structured trades or setups, as you think of them, for games as far as how a casino approaches their business. That's the basis of Trader Lab, and all these tools and structured trades are available to all of you at no cost. They're available in the Bookmap Discord Trader Lab community, plus a library of webinars on the process you see here every day. And I appreciate you guys stopping by. Let's take care of business, and then we can go from there. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is for educational purposes only, and it is based on structured trades that you will see here. Also, if you're interested in what you see, there is a link in the bottom of YouTube, and you can visit the Bookmap Discord Trader Lab community. There is no cost. It's a community of like-minded traders that have come together to leverage their collective experience in order to have maybe a better experience, or at least have the opportunity to build out the business side of trading, and then only interact with the other market participants where there is an edge. That's the business. It's not a video game. It's not predicting what's going to happen next. A lot of the need to predict is about the need to be right and avoid pain, fight and flight. That has nothing to do with the business of trading. We come into this business thinking it's really about predicting, and it's really not, because I don't think any of us can predict. Though we do get lucky and sometimes we are right. But the business is not about being right. The business is about edge. They don't shoot the dealer in the casinos if somebody walks out with a suitcase of cash. The way they extract their dollars from the gamblers in the casinos is just playing the games the same way. So if we can use that as a model, then it isn't about right or wrong. It's about following a plan that has an edge. And the only way you extract the dollars over time from the gamblers is by executing your plan. So let me just take a look at a couple of things here. So we have yesterday's high, yesterday's settlement. This is going to be the RTH open. This is the ETH overnight volume point of control. What this represents is the highest volume in the ETH. Think of it as a retail price from yesterday. One moment here. We have a naked volume point of control at 54.80. That was the highest retail price in yesterday's RTH. ETH low, high probability of getting taken out, either ETH high or low. Yesterday's low, always a possibility. We were looking for that yesterday. If you guys have followed the stream, remember, because there's sell stops. We didn't get it yesterday. We missed it. Look, yesterday's low and the previous day's low was down below. 54.20 is an open target down below. Just letting you know. And there's more down here if we continue. So I won't go into statistics. Those are available to everybody in the Bookmap Discord Trader Lab. So let's go from here. If you have questions, please post them. If you're in YouTube, thanks for visiting. Please give a thumb up in the bottom of YouTube if you're getting some benefit from this. There's a lot more information available in Trader Lab, but you might get the general idea by watching the stream. And remember, the link is down there. If you want to visit the Bookmap Discord Trader Lab community, you do need to verify your email so you can access the Bookmap Discord server. It's really to keep the the spammers and trolls. And I'm not sure what a troll is. You know what a troll is? You think about what a troll is. It was like a bad, kind of a creature, right? So now we have creatures out on the internet. They're trolls. Okay, RTH open. Let's look at the open. Now, I'm going to take you into structured trades and Trader Lab. And again, you have to vet these for yourself. If you have questions, please post them. Hold on a second. Thanks, Lucky. Let me try to get things going here. Okay. This is, now we had a bearish report, as you guys know, CPI report, kind of nasty. And there's an old saying, and it's only old because I've been saying it for so long. The market goes up to go down, and the market goes down to go up. We did not take out Monday's low yesterday. We got close to it. That means the longs in the market and the longs that came in yesterday would have their stops. So the market goes up to go down. So the market came down yesterday but didn't take out the previous day's low, and then we got new buyers. So we have stops under Monday's low. We have stops under yesterday's low. Market goes up to go down. So we know the possibility, and that's all you get here, is to do that. Let me get rid of this. This is stale, by the way. So now, bearish report, open higher. Now we're looking for who takes control first. So here's the plan for the day, and the plan is always subject to. If the market goes up on a squeeze, then comes down, sell it. If the market opens and goes down, look for a retracement, subject to the retracement and structured trades, sell it. Why? The market goes up to go down, and the market goes down to go up. So let's look at the first trade. Now, these are structured trades. Now, I have to say something. Structured doesn't mean mechanical. It means these are setups or structured trades that are vetted, and that's up to you to do that, and they are in alignment with the context. And the context is the hardest part of this, because you have to understand market mechanics, and this is what we focus on Trader Lab. What does the market do? Why does it do it? It tends to do these mechanics, if you will, of up, down, down, up, because no matter which side the trend might be on, in a developing time frame, there's always stops on each side of the rotations. So if the market goes up, you can look at it to go down, even if it goes up later. Or if the market goes down, you can look at it to go up. So the thing about it is, like example, this morning, down. Now what? Up. Why up? Because the market went down. And then when it goes up, maybe it'll go back down or rotate. Now, I'm not looking at the current market, but it's this idea of rotational behavior, because there's always somebody on the other side. If you need, in my opinion, to always be thinking out of both sides. You're thinking well, I want to be short, but you got to be thinking about counter rotations and why a counter rotation happens. Now, the other part of a counter rotation is counter rotations can turn into reversals. So how do you differentiate? Well, you can't differentiate until hindsight. But if you understand the condition of the market, you might know what gives you an opportunity for a continuation trade versus what might be a reversal. And that's how you differentiate based on context. So let's go back here and let's get rolling. RTH open 8:30 Central Time. Here's some buyers. It's a wonderful day. This yellow line is called the developing volume point of control. What you're going to see here, let me just point out what we're looking at here. This is going to be the session volume point of control, session volume profiling. It's going to show us all the volume as it comes in during the day. Okay. The yellow line represents highest volume in this moment, in this fractal. It starts at 0 at RTH open. So it's like it starts counting. So what it's telling me is right here was volume. And now this is not even a quarter of a second, so I'm just giving you a little minutia. Now there's more volume here. You can see it than there was down here. So the line moves up. It's as simple as that. Now, right here, I have my buyer. That's delta. That's aggressor. Now there's an aggressor. So we have buyers. It's wonderful. What's up here? Nothing. What's over here? This is a micro consolidation or a fractal. This is the chart volume profile, and what this does is it's only going to show me what's on the screen. So if I want to zoom in or out, I can look over here and see what is inside. Think of this as a higher time frame. Right now we're only opening, so they're both equal. Okay? But as this thing develops, we're always going to be coming back to look in the microstructure to see what happened. Now let's talk micro for a moment, and then we'll move on. When the market pauses, it's a consolidation. A consolidation is really a micro auction. Like, oh, I'm not paying that. Yeah, but it's on sale. Inside of this is high volume. That's where the yellow line is. If I leave it, think of it like shopping. This is too high. Now, I'm only giving you a little micro thought process here. So what do I know? Here's what I know. Now, this is all in real time. Not what I'm showing you here, but this is how it develops. So in the Trader Lab, you would be learning something called narration. In other words, how do you stay in real time with the change of the behavior of participants? It is not with an indicator that's backward looking, conflicting, random, and the rest of it. Now, the market's random. So do we want random inputs too? Well, casinos don't use random inputs when they play their games. They use fixed inputs. So, too high, break low. I see my sellers. Now, my developing volume point of control, that's what this is called, a point of control. That's a market profile term. This is where more volume is. Now, I'm not even in a second yet. So I'm just showing you minutia. So let's see how we might use it in the real world. VPOC migration. So let's talk language. It was Joan Rivers. If you ever remember the name Joan Rivers, she used to host the Johnny Carson show, if you remember that. And she would say, can we talk? Well, can we follow? Too high, break. So far, I'm seeing my sellers. Now, what do I know? This is too high up here. Variable high volume node. We left it. There's another one here. It shifts down. More volume is below here. That is saying, subject to how you read the market, and this is what this is about, language. This is a language of the market, not an indicator. This is saying this is more fair than that. This is like you shopping. The auction is not a complicated process. Now, the market is random, but the auction is a language of valuation. I'm not paying that. And you get in your car and you leave the store. Isn't it simple? Random, that doesn't make it simple, but the process we can read. If this price is too high and the shoppers go, I think that price is too high, they're going to leave it. So let's look at what happens here. I go down lower. So what does it tell me? Let's look at language. Too high, break low, too high, variable high volume node. In the Trader Lab, these are shorts. And these are structured trades, not recommendations naturally. So under here, too high, let's mark it. So what I do, and I'm doing this really to show you the structural development and how the market works. I can't predict what it'll do. I can certainly understand what it might do. too high, too high, too high, too high, break, too high, break, too high. South of the border, all shorts in the Trader Lab. Let's watch the behavior. Back to VWAP. Thanks for playing. We enjoy you being here. Where are we trying to go, by the way? We have statistical probabilities. Overnight volume point of control. I don't have my stats in front of me. These are available to all of you who are visiting Trader Lab and the Bookmap Discard Trader Lab community. You can download them, plus the 60 PDFs of these structured trades. This is about an 80% probability-ish. This is the target, first target. There. So your short is from anywhere up here. This is another ad, or you're just in the trade and you're not doing anything. And this is where you're going. Now, then we have another target here. There's more. Let me show you the targets. 5480. I believe that's the right number. I don't remember. Is that a stale VPOC, guys? Can you let me know? Trader Lab, is this a stale location, this 5480? I'm not on my trading. Andy, the 5480 is valid. Is that right? Okay, thanks, Andy. Okay, this is the next target coming down. Let's watch the behavior. This variable high volume node, this is another structured trade, not a recommendation. You can vet these. There's actually a number of additional ads here. I'm going to explain a little bit more about what's going on here. So these are targets. This is a target. There's another one down here someplace. We have ETH low. That's a target. We have the stops under yesterday's low, valid targets. And we have this. This is the next target outside. And I'm going to tell you, clueless, 5420. Why? Not my job. But I'm going to show you the trades. So anyway, we are going for this as a primary target. There it is. Now we get rotation. Now let's go back and think about what's going on here. This is retail. Now the thing I know about this is this might be the low. This could be the end of it right here. And then it becomes a long. I'm going to explain. Now this is an advanced scenario here. It's not necessarily your trade. It might not be my trade, but what it is, by the way, overnight high is here, yesterday's high. If you don't take out yesterday's high and the ETH high, what does that set up? ETH low, yesterday's low, just saying. And there's statistics for all of these. So now let me talk to you about a potential long. Now, it's not a long, or for you in your trade plan, it might be a long. And here's how this trade would work. Now, this is what I perceive to be a counter trend trade. Just saying. Why? Statistically, I have targets open below. So I would not take this trade. But I want to show you market mechanics. That's the goal of the stream here, is to show you trades. Now, how you put it together, strictly up to you. In other words, some traders in a Trader Lab are going to get long here, and the target's here. Then they're looking for a reversal and a squeeze. That's one possibility. The other possibility is this is a long, which is not a long. It is a cover your short trade. In other words, a long trigger at a location which sets up a return here. Do you want to ride this out? Maybe take out the high and go on and, the happy hunting ground over here. I should say on your merry way, following the yellow brick road. Or if you cover, then what are you looking for? If you think the trend is down because statistically we have open targets below, you would not take a long here if that's your plan. You'd be looking to re-enter your short for a continuation trade. Does everybody see that you always have possibilities and that the answer is not here in the Trader Lab? The answer's in your trade plan. The trades you can get from the Trader Lab, and you need to reverse engineer them and vet them. If you were in the Trader Lab, you would understand why this might be a long, because it's auction based, not floating out in the air someplace. It is based on how the market works, not what it will do, because we don't know that. But if we have alignment, which is what this is right here, and we get a microstructure, I'm going to show you a trigger. I'm just going to kind of break out, if you will, a trigger for you. Now, this, of course, is in hindsight, but let me show you what it looks like. So let's look at microstructure. I'm going down into something, you guys, what I like to think of as fractals. So this is microstructure, and you can do this with an order flow tool and understanding the auction and how the market works. I'm going to say our market does not work based on what an indicator does. An indicator is like Google Translate, and it's a wonderful thing, except if you don't understand how the market works, you're going to spend your life trying to get the indicators to work. And the thing is, the job of an indicator is potentially to provide some guidance when it's in alignment with other elements. It is not, in my opinion, and it's just my experience, not saying it's right for you, it has no alignment. So what is this? What is this? Chop Chop is an auction. Buyers were here. What happened to these guys? Sellers are here. Let's just look at the story. Now I'm in order flow. Just a little deviation, but it's very important. Why didn't the market go up? This is delta. Why did the market not go higher? Because there's a passive seller here, and this is absorption. Now, I don't know right here what it is until it is. That means here. So what happened here? Too high, don't know. Seller here. Let's look closer. Order flow. Sellers are here. Buyers are here. Chop Chop. What's going on right in here? The sellers that absorb these buyers are here. Now, I don't know. The sellers are here, and the buyers absorbed these sellers. So it's opposite. You got sellers against these buyers. You got buyers against these sellers. Chop, 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 chop. Fight. Shootout. Break away. Sellers take control. These guys are under the bus. So where's my micro high volume structure? Now this is fractals. And what is a fractal? Think Russian dolls. Write that down. It's like Matryoshka dolls. It only took me a year or so to get that down. A Matryoshka doll is like basically those dolls that are inside each other. This is the little doll inside of higher time frames or bigger dolls. There's my selling. Here's my test. This is a Trader Lab trigger. Let's look at it. Notice where we come. Test, but this is the trigger. This is the test. I get VPOC migration. This is a confluence of triggers. This is a trigger. This yellow line is the same as that little line. They're inside each other. That's a short in the Trader Lab. And don't forget, where are we trying to go, right? We were trying to go there. So anyway, I'm taking you back to how you can navigate this. Now let's look. Where do we come? Here. What is this? Outside in trading. So right here, now this was the target, right? So right in here, let's get down into microstructure. Break low, microstructure is here. Well, should take this back just a little bit so you can see it. You see the volume in here? These guys are absorbed. I break low, that's a trigger. The volume is there. You can see the nodes right here. So this chop, 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 these guys are absorbed. Trigger, pull back. This is, in other words, I'm using these structures for managing the trade, if that's part of my plan. Let's watch. So you get what? Too low in the microstructure, break high, you test the volume here. Right there, the antenna would go up if you use these time frames. Resistance is here. If we don't break under here, there's trouble. Break high, watch. Come up here. What's up here? This was too high. This sets up another short or nothing. Let's watch it. VPOC migration. Let's look at this here. Variable high volume node. So I have the VPOC here. I have the VWAP here. And we have a structured trade in the Trader Lab called VWAP to VPOC for continuation. And remember, I have targets open below, which is kind of guiding the tanker. This is too high. This is a variable high volume node. What's the concept? I'm not paying that. This is the new retail price in the developing time frame for the whole day. These inside of this are microstructures. Microstructures. Too low. Microstructures. I can use the little ones for triggers or trade management, whatever I feel like doing. What is my location? It's here. Let's look at it. So my volume is here. I'm just going to put a little line out here for us so we don't lose that. And I'll look at your questions in a moment. This is a structured trade from here to come out the bottom. There's your volume. Break high. Right now, no trigger. Break low. Your volume is here. Now, you might not be able to get in this trade. Can't get in all of them. Or let me give you the other part of this. Your stop is way out here. These are all possibilities. So this is a short, if you can do it, if you have an entry. Also, when you break here, so you have this, when you break down under here, and you're under this. This is also another structured trade here in the Trader Lab. It's advanced. I'm trying to give you the broad strokes, but these are also structured trades. This right here is an entry, and it has to do with the following. This is too high. This is too high. We come under here. Now we came under here. We crossed above it. That sets up a compound situation. What this sets up is mean reversion. That's the mean. This is the outside back to here. If you don't get that, you break below. Now this one, because it's a trend configuration, for me, I would short this, and I have this volume in here. From here. So right here, this is all fine. Here it looks like it's going, to zero. When you come across, it sets up mean reversion outside in. It's a change in context to come back here and to continue down. Once you're under here and you test it, here's a trigger. Here's the test of the micro volume. Right here, it's another short. Next target is here. Watch the behavior. VPOC migration. This is too high. I got to label this. I'm following process. Let me just try to get through all this for you guys. And I think we'll get caught up before too long here. ETH low statistic over 90% probability. That's also a target. So you got this is a target. This is a target. And then we have yesterday's low, wherever that went. It's down here someplace. I don't even know where it went, but it's down here. ETH low. So you're just going to manage this trade, VPOC migration, let's keep going. Too high, let's label this. All these levels are going to be important. So if you're in Trader Lab, other than that one counter trend trade I pointed out, and I'm not saying you can't trade both sides. It's not my business. It's your business. This is too high. This is now the retail price. Too high. Now, let's watch for change. Now, nobody knows where the high and the low of anything is. So let's just remember that. Everybody's clueless. At least I am. So this is too high. We're going to label it. Variable high volume node. I'm doing a similar process, and I am in the world of, I don't know, uncertainty, cluelessness. Let's watch the change now. So this is still going south, right? Where to? Don't you wish we knew? Because guess what? We don't know. If you know, DM me. We'll talk. Now, this is the retail price. I'm going to label it. And this becomes very important. And I'm going to tell you why. and the change. This is what change is about. You'll notice that as we're going down, the VPOC has been following us down. In other words, the high volume. We're getting higher volume, higher volume, higher volume, going down, 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 saying this is the current retail price. But there's another thing about retail prices. What happens if a price gets too low? And the sellers are not willing to sell it to you at this price. And the buyers start consuming the sellers. So right in here, now this is a consolidation, right? There's more volume here than there is anywhere else so far. Let's look at the logic. This drops down. That's measuring for the day. Most of the volume is here. Now let's look at the order flow. Chop, 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 having a wonderful time. Going to zero, right? What do I see here? Let me go just a little bit further. Here's micro structure. Make sure I got the right levels here. I'm just taking these high volume nodes, these high volume, because this here is a consolidation. If it's too high, I break away. This is resistance. If I take the full structure, high volume is here, I break away, it's too high, and then I anticipate continuation. That's what I anticipate. Now I have high volume here. Let's just keep doing the same thing. Chop, chop, chop. What do I want to see? Too high, break away. Chop, chop. Break away. Too high. What do I want to see here? Chop, chop, chop. Break away. Let's watch. Break away, resistance, come back to support, and I need it to do such for continuation. What does it do? Opposite. That's warning Will Robinson moment. You know who Will Robinson is? That means get your helmet out. Now there's another piece. At 9:30 Central Time, I got to tell you about this. Here, 9:30. There's something called the IB stat, and the IB low is the first hour's low. And what it is when you break this at 9:30, it sets up something called, and this is a structured trade, the IB continuation trade. So you break this, and there's over 90% probability you'll take out either the first hour's high or low. And considering we're going south of the border, it's a short. So the short, hold on, I got a lot of racket going on here. I don't know what's going on over here. I'm not looking at my other charts, so I got to I'm hearing all kinds of noise and alerts going on. Remember, the market goes up to go down, and the market does go down to go up. That's the top of the stream every day. Hold on, guys. Okay. So this is a change in behavior, and we see the rotation. Now, this is a structured trade. Let me show it to you. This is called the IB continuation trade right here. So right here, we have our micro high volume. Let me take you into it so you can see the trigger. So I have my buyers going to the moon, right? Of course. I have my location, and I have my volume in this below me. Variable high volume node. It was too low. So what I know is possibly I'm going to come back here. That's what I know. I don't know anything else. So here's my high volume in this structure. Let's just look at it. There's my trigger. Now, in this structure, it is a consolidation. Remember, all these changes typically come out of consolidations. We can see a consolidation. We can structure it. In other words, and where's the change? Let's just look. So this here, and there's no way to know, so don't think, but here's what I know. I see volume here, right? Same thing. It breaks high. Well, that's support. Now I see volume here. It breaks low, resistance. I test support. I pull back to resistance. Now, one moment here. Let me try to get this all. Okay. This is a short, and you're looking for it to come back and take out the lows, which would be the thing you want to see. So that's a short. And here's your high volume in here. So we're looking at this volume right here. So let's just watch it. It's a short. It's a short. You're sitting in a short. VPOC migration. Looking for it right here. This is where it changes. Right here, you're looking for, this is resistance. This shifts down. It needs to break under here. When it breaks up, you're out of your short. Now, what do? Well, this now is the volume point of control. This is too low. This is now, there's a couple possibilities. Come back up here, come outside, and now we're back in mean reversion, which is a short. Let me show it to you. Right here, actually. This trade right here is a potential short. Now, it may or may not be your trade. Let me show it to you. Now, I'm going to stop here in a moment. So if you have questions, please post them. I'll do my best. Thanks for your patience. But they're on separate monitors, the chat, so I can't see them. Also, I'm not a good multitasker. So up, up, sweep, and resistance. Where's the resistance? It's here, high volume. And what else is out here? The IB, first hour's low. What's above the first hour's low? Stops. So it's a IB continuation trade. This is the same trade that I showed you earlier. It's the same trade. All we're doing is coming outside. Now, the problem, of course, like everything, is we have something down below, which is something that says be alert. And that is the VPOC migration, saying maybe that low level is too low. But I don't know that. Here's what I know. I know this is a vetted structured trade for me. I know the trend at the moment is down. And I know if I get a trigger, I'm going to enter a short. I know right here is my volume. And here, and I know this is a consolidation, this here. So if I break this volume here, right there, I'm going to draw it for you so you kind of see what I'm talking about. And now I'm back in the consolidation world, hopefully. So chop, 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 break high, break low. This is a selling structure. I pull back in here. This is an entry. This is an entry. This is an entry. This is a short. Now, where are you trying to go? Here. Now, this shifts. You're trying to go here. This shifts. This is a problem. Actually, this trade here, I took this trade, and I was going for this. When this shifts, now I'm on guard because if I can't get below here, I'm going to squeeze this out. See what happened? So I got scaled. I didn't get here. I didn't fall out the bottom, and I got taken out. And got a couple burgers, and that's the end of it. So now everything looks like it's changed. And I haven't seen any of this. Now we got to label this. And I'm going to come up for oxygen here now. Variable high volume node. It's a little bit off, but it's close enough for horseshoes and hand grenades. So let's go take a look and see what we've got. I'm actually going to look at your questions now, guys, and then I'm going to jump into real-time narration. I don't think I need to go over any more of these because I have not been following in the sense if there's structured trades or anything. Hold on. Problem. Okay. Sorry about that. Thumb up in YouTube if you get something from this. Patrick, keep posting. Questions, guys? Remember, this stream's available to Bookmap Discord Trader Lab participants to reverse engineer, review, screenshot, and the rest of it. Let's look. This, let me show you this. Now, I haven't seen these, so I'm looking in hindsight. Life in the fast lane. Remember the trade I was just talking about that was a short to come back in? This out here is the same trade from a different location. Let me show it to you. It's called mean reversion. The mean or median, if you will, is the highest volume. What the market tends to do is if it gets too high somewhere, and this is like, why not here, right? Well, this is the same trade. It's to come back here and then maybe lower. We squeeze these guys out. Now I come up here. What do we see up here? Micro volume is here. I break high. I'm seeing icebergs here. No way to know. But here's what you look at. This is an outside edge. This is a distribution. This is an outside edge. Now, if this is your trade, fine. If it's not, you just sit here and you're a tourist. You might be waiting for this. I don't know. But let's assume that you have a mean reversion plan. This is a specific plan in Trader Lab. It is an isolated process. It is trend down, counter rotation up, retail price. The trade is to go outside, and this is a hard trade, by the way, because where's the outside? Was it there? No, I don't have a trigger. Where is it? Where's my trigger? Is this a trigger? And now I come back here, you see, and you get popped. You get stopped out right there. So that's, this is my least favorite, if there is such a thing, because what you need to be doing in this structure, because the target is this, is to pick the outside edge. I mean, and as Dirty Harry used to say, do you feel lucky? Well, do you? So you need, of course, some luck in this. There's the trigger. There's the retracement there. Now, if you're looking at this and that's the trigger, there's the retracement there. For me, if I take this short here, I'm just telling you, my stop is right here. And I take stops all day. Part of the joy. And I come out here, I think it's all over and we're going to the moon. What changes? I break below here. So all I did was come out a little further. I've got my icebergs and I break down. This is another trigger. So you have this, and now it's all up to you. And order flow is an important piece. What did we see here? Let's look at this. I got a buyer here, but I got selling absorption. That's the icebergs here. I get my sellers are under this buyer. This is valid for me. I get my seller here interacting with the buyers. This is absorption. These guys are under the bus. This is a short. Now, here's the problem. We can still come up here. And let me explain. The fact that we get past here doesn't mean as much as you might think it does. What it means is the sellers that are here absorbing this buyer, if we come up, they may. Now, two things can happen. Obviously, we can keep going, because we don't know about that. Or here's the other part of it. The sellers that were taking the other side here, here, and here are going to get reactivated when the buyers come up higher and they're going to sell more. It's like, oh, really? Yeah, have a few thousand more. Thank you. And then you get the change. That's why this is another short. It's all a matter of your plan. Or you don't take these trades. The target is this. Right there. That's the trade. That's the scale. This is a trade I take. And that might be a stop I take too. It just doesn't matter to me. I've gotten past being right because it doesn't matter how right I want to be or anything. It just doesn't matter. Now you'll notice we're back above here. And VPOC migration. This suggests north of the border. So there's nothing for me to do here now unless I want to be long. So let's see the rest. You guys have questions. Let me try to get back. Where are we here? Oh, that's why. Oh, back here. This is a short in Trader Lab. Sorry. Right here, this was too high, variable high volume node, and this was a retail price that was a target coming down. Let's look at the trade. This is a structured trade, and again, it's more on the advanced side. I'm going to take you into this. Now, remember, anytime you put a trade on, your job is to get risk neutral, job number one. So let's look at this. Now, here's what's important about this. Because this was too high, remember, that's why I mark them. And this was a target coming down. It was a retail price that was too low. Now, if it's too low and I come back from below, in other words, it was support, is it possible that support becomes resistance? Now, in the developing time frame, whoa, where is this? This was too high. More volume is down below us. I'm not paying that. Notice where we come. Do you think this is a coincidence? How about it's the auction? So what do we do with this? How about it's a short in the Trader Lab? Let's look at the structure. Let's look at the trigger. And let's not think that this is a trade that is recommended because the outcome is random. But these are structured trades. So let's look at the structure now. First of all, location. This is like real estate. You know, you've heard of that. Location, location, location. Location, location. What's this? Location, location. Confluence. What is... That's what this is. The high volume. Think fractals. Now, where do I come? By the way, if I was long, which I wouldn't be, this would be its target coming up. Instead, it's a short. Why? Maybe the trend's down. I don't know. What do you think? Let's look. I come up to the location. Now, while I'm doing this, I am not taking trades in the middle of nowhere. My job is to just wait. This is like waiting for your bus. Is this a good bus to take? Well, it has your number on it. You take it. Now, I'm back here. High volume. We rejected it. What do I see? Sweeps, absorption, you know, going to the moon, right? I don't know. What do I see here? Let's start with the fractal. I see micro high volume structure. Now, I don't know anything, and you know. Here I see a change in behavior. Now, where have you seen change in behavior? Up, 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 down. Change. Do you recognize change? Where do I come? Here. Now, let's assume I'm asleep at the switch because I, you know, maybe like you, sometimes you're napping and you miss it. Well, let's assume we miss it. What happened here? Let's watch this. High volume is here. High volume is here. Break, test, break. Where's my volume? Short, 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 short. Where to? So if you took this right here, it would be a short and you'd be looking for this. What would happen with this, if you took this trade, you would have a scale because this is your entry. And then your stop would be above here and you'd get taken out of it. I'm just showing you trades. That's all it is. I'm not calling them. So now, once we're up above this, then there's nothing to do. We just tested this here. We still got to see the behavior here. Looks like it's going to go higher. So there's nothing left to do with this. Unless, right here, and it doesn't look that way. I'm still seeing my sellers. I'm above my high volume structure. This is the next area. Now, pretty much this is done, I would say. other than rotational trades, kind of a scalpy type of a thing. I don't do that. I don't because it's not my thing. I do is I wait for locations, I put a trade on. My job's to get risk neutral and then go for targets, extended targets, like down here. If you can get a 15-point rotation, that's a good day. That can make your day. So to get the opportunity for that, I wait for locations. I look for behavior triggers. I have to get risk neutral. So the worst that happens is, and I take full stops too, is that I scratch the trade and my broker sends me a gift basket. That's it. So this was risk neutral, and then you'd be out. The way the two-lock configuration is what we discussed in Trader Lab minimum, and that's so the job of the first contracts to buy the stop on the runner, so that if the trade fails, then you scratch, and that's that. Then you're waiting for the next bus. Location is here. This is another area. Let's watch the behavior. Remember, the location was there and there. How do you tell the difference? Wouldn't you like to know? I would. I can't because they look the same to me. What I know is the levels. This is what the auction is based on. Levels. That's why when we came to this level, it was a short. It's the same trade from up here, just different location. And the thing about trading is, if we accept randomness, why would this one not work? Well, it worked to get a scale. And why at this location is it maybe doing a better job? Because the target is here. That's something I've never been able to answer. And then, in other words, the why. The only answer I have for the why of this is the randomness and nature of the market. That's all I know. It's the same trade. So seller is here, buyer is here, break here. This is a potential short in here. Now you have to learn to read this language in order to execute in a timely fashion. The other part of this is, as you're developing your skills, this might not be a trigger you can operate with because you're still developing. Then you don't have a trade. You're a tourist. And what you're doing is you're narrating always. What is this? If this is too high, then potential to come back here. If it's not too high, we just might rotate and then squeeze. That's part of it, right? So no way to know. That's all you got. But the thing is, if you have a location for a trade, and let's look at where the micro volume is right in here. We're just going to watch behavior. Now, for me, this is the trade. The retracement might be fine, but then you've got to read your order flow, and it's possible that we're going to continue coming back. All these things are possible. What I have here is confluence. That's what I have here. So let's just watch the behavior. Now, let's assume for a moment I did take a short here. What do I do with this thing? Well, right here, I know my sellers were in control. I know my micro high volume is right there. I know if I get short, my risk can be right here. Not a recommendation. Let's see the behavior. I got buyer here, so I got to watch right in here. Do the buyers take control? I'm seeing a buyer here, and it looks like the buyers are taking control. So then there's nothing here for me to do. I got to watch my volume. Looks like the buyers are taking control. Okay. Let's see what happens. See the fight between the buyers and the sellers. One side's going to throw the towel in. It's going to happen right in here. And it looks like the buyers are, you see the buyers are above this seller. They're above this leg. So these guys are getting squeezed. And then we have these buyers up here. So your resistance is really sitting right here, right there. So we'll just watch the behavior here. You can see with the order flow, you got your buyers were absorbed here. These guys are now under the bus. You got your buyers here. This is the last stand for the sellers in this leg at the moment. And there they are. So right here, if these guys get taken out, then we're going to squeeze. If not, then you get this thing, you know. So this is really how, for me at least, I can narrate it and I can act in a very timely fashion. So if I get short, you know, I can have my stop here. I'm not recommending that, you know, or out here. It doesn't matter. I mean, it's what matters is you having an edge and a plan. Then we all take stops. So, and I'm just saying is this might be a trade you would take, or it's one you wouldn't if it's in your plan. How do you know whether or not you should take this trade? Well, your plan is what tells you what to do. In my plan, I know if I come here and here, I'm going to be looking at it for a potential rotation down. If I get past this, then it just tells me I'm going higher. You know, in other words, I'm going to come back up into here and, you know, all this is over with. That's what it tells me. But if I'm a rotational trader, then I know in here that I can get this. And I got my rotation here. So by the looks of this, we're going to squeeze these guys out. So we'll see. This looked like the last shot right here. You see how the buyers picked it up? And also what happened over here? You see this seller? They were absorbed. So that kind, and down here, absorbed, you see, sellers were here, sellers are here. That's the bracket in the sense of who's on either side. Once we start coming up here, the buyers, and now the buyers absorb this seller, then it suggests north. The order flow helps us see that. In other words, I see the buyers were absorbed and the buyers get above this guy. Not so good for this or this. That's this seller, same sellers potentially. Now, if they're under the bus, now the buyers are above them, the buyers are in control. Sellers tried here, buyers absorbed. Sellers are still here. Buyers are absorbing. Let's see the behavior. Remember, sellers were up here. Now, I suspect north, don't you? Why would I suspect it? Because of what happened here, here, sellers are here, buyers, sellers are here, buyers. That's why order flow is helping me see that. Okay? Does that make sense, guys? Hope you're getting something out of this. Farshad, go to the knowledge base. It's explained in there, and also IRT's knowledge base on how to. Well, actually, no. You just need to go to Bookmap knowledge base and how to export cloud notes. Any questions so far, guys? By the way, guys, I need to post a little something for you while we're watching the market here. If you are visiting us in YouTube, there's exclusive material and streaming available in the Bookmap Discord Trader Lab community. You do need to verify your email to make sure you're not a spammer, you know, that kind of thing, so we can keep the community secure and, you know, make it, for, you know, the best experience possible. There's a link in the bottom of YouTube. You can, if you verify, you can visit the Bookmap Discord Trader Lab, download all the resources, 60 PDFs of these structured trades, library of webinars in the community. All is available at no cost. You just need to verify. Also, in the bottom of YouTube, there should be a link. You can actually get a free version of YouTube. You know, I haven't slept well. This is, by the way, what the PDFs look like. They show you trades, and these are this is like live trades I've taken. And some of this, this was done in 2020. Just so you know, I'm not a vendor. There's no specific course, and some of this was research when I was working with Bookmap developers on ideas, some of which have been incorporated into their add-ons, and, you know, others, of course, get jettisoned, like anything that you do beta testing on. So all of these are available. Structured trades, order flow ideas and observations, things that you might find useful. And you're all welcome to do that. Use the link in the bottom of YouTube. So let's come back here and post your questions if you have them. I got to look at the bigger picture here. You do not want to get myopic. So I really don't have anything here except scalps, and I'm not a scalper, so it's not my thing. I don't find it's worthwhile. I mean, this is a short, but where are you going? You know, nowhere. Maybe out here. So this is, I could say, as a scalper, I could be selling this. But what I find for me is my risk, my stops are pretty consistent with this methodology. I rarely have a 3-point stop. Usually it's less. Occasionally it's more under the right conditions and based on volatility. But normal, if you will, is 2.5 points less if I can thread the needle. And that requires patience, not FOMO. Notice the, come back to the micro volume structure right here. Absorption is here. Support was here. So I can see support and resistance right here. You can see the micro high volume up here. Let me just show it to you. I'm just pulling this out of left field, basically. Here's the volume here. Let's look at the behavior here. So I have microstructure there, too high, break low, trigger. Where's my volume here? It's right there. There's my pullback. So that sets up a scalp. What do I know about this? Absorption. So I have buyers here and I got sellers here. If I can't get below these guys, then I'm going to potentially squeeze these guys. That's what I know. So if I get short, and this is the range, so this is the problem. And where am I coming back towards? Here and here. I'm above it. So I'm not saying these are trades anybody ought to take. All I'm doing at the moment is narrating for you guys. So you could kind of see how to read it. Now, how do you trade it? Well, if we know the buyers are here, we know the buyers are here, we know the buyers were there. Where is support? Isn't it there? There? And where's resistance? Isn't it here? Resistance, support. If I didn't get under here, what does that suggest? Potentially higher. So this is my little sandbox as a scalper. And again, I'm not a scalper. But what is a scalp? You know, we think about scalping, and I think a lot of traders or developing traders think this is a video game, and that if you make your targets closer together, that you have a, quote, better chance, higher probability. Yeah, but here's the other piece to that. If you're risking 2 points or 2.5 points for a trade, then the only way to make it pay is to have a high probability of getting your target before you take your stop. If you risk 2.5, what are you going to do? Go for 2.5? What are you doing? I found for me that my broker did really well because it required more trades, so more overhead. And if I didn't have a good day, my broker still had a good day. So I was always pushing against that. So over time, and I used to be a high volume NQ trader, 100 trades a day, that kind of thing. I just found over time that the fatigue, the potential for errors when you have to be in that heightened sense of interaction, keeping a lot of pieces together in your head was very difficult. And then I said, well, maybe let's go back to because when I was first started trading, there was no real day trading. It was really more positions. So when I managed dollars, it was really trend following, put a position on, go on vacation. Actually, you put a position on. And the shortest term trading for me I was a swing trader in the big S&Ps back in the day. And those would be 2 to 3 day swing trades. That was short term. The rest of it was really trend oriented, currencies, bonds, things that and commodities, regular commodities, which, crude, things of this nature, that would trend. So, and it would just be whatever. Soybeans. Notice where we held. So when you have an order flow tool, the buyers were here. You can see them. The sellers here. Remember how we narrated this? They got run over. So these guys are under the bus. These sellers tried here. The buyers took them on. Notice where we come. If the buyers liked this price, let's just think about interpreting what we see. Would these buyers who bought into these sellers buy again over here? They might. That's support. Now let's go to the other side. Where's resistance? It's here. The sellers took the other side of these buyers. We come back to support. We come back to resistance. Notice where we come back. Resistance. Where is support? See what I mean? There. Now, you may go, what's the point? Here's the point. The point is, can you read this? And then if you can, do you know what to anticipate? Not expect. That word doesn't exist. To anticipate. If you know what to anticipate, can you navigate what to anticipate? And if you can anticipate it, can you operate in it? Now, that's why I'm saying I'm not a scalper. That's not worth my time, trouble, or money. But it might be worth it to somebody else if you understand order flow. Does that make sense? So let's look at our levels. What was too high? Microstructure. Sellers were here and the buyers absorbed them, but they were overwhelmed at the moment. So let's see what you see. I'm only talking order flow, and I'm really giving you a sense of structure and how you might read it. Now, I don't have trades here, okay? For me, these are just scalps, so I don't have anything here. But I want you to take a screenshot. If you're in Bookmap or you're in the Trader Lab, you should be screenshotting what is happening. Where's the changes? Why did we come here? Because the sellers were absorbed here. What happened here? If you don't get through, it's support, and it's based on the order flow. No line on the chart. What happened over here? This is a screenshot opportunity. That's support in order flow. You see? This is resistance in order flow. Support right here. What happened here? Sellers, I get a rotation. Where's my buyers? If we're above these sellers, that is support. If I get above these guys who were absorbed and I come down to where the sellers were overpowered, which is here, 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 and the buyers took control, then I can come back here. Here's my sellers. If I get above here, north. So, and this is not really Trader Lab in the sense of these are not structured trades. This is scalping. And this is strictly order flow and levels. And again, it's not something I care for. Because you know how many trades you could be taking in this? And then here's what you take. You get some winners, you take some stops, and you run a lot of commissions. And then when the dust settles, what did you get for your risk? Now, there are some traders that this is all they want to do. It's action and dopamine. That's okay. If you have an edge with it, it doesn't matter, But if this is what you think trading is, this is not what trading is. This is just rotations. Now, you have to define what trading is for you. But the thing about it is, you may not know what trading is for you. You may think it's just a video game. It's not. It's a business. So if you're going to build a business, I think you need to know what business to be in and how to manufacture net. What does it cost? Cost of production is losses, overhead, commissions. You can throw anything else you want in there that has cost relative to the business. But we all have that. Every business has overhead. Change in behavior, but it's only a rotation. And here's the other piece. We're at an outside edge. That sets up mean reversion. These are trades in Trader Lab. They're more advanced processes. As you come outside, it's like what's too high, then the market can return to these high volume structures and even come out under here. Let's see what it does. And this is a specific trade plan. It is a more advanced plan, and I find it not my, and I always say I don't like it. And here's why I don't like it. Because I can be taking shorts trying to find an outside edge. One of them might be the outside edge. So along the way, scales out, scales or stop out here, maybe a stop, maybe, you know what I'm saying? So, and this is really counter. Now, is the trend up or down? Isn't it a great question? Well, what's your time frame? That's really a function of what the trend is for you. For me, it doesn't matter to me. This kind of trading is just rotational trading. So I think the trend might be down, but maybe we took care of that already. And now we've got the shorts in here who are in the squeeze-area, right? So for me, any trades I take on the short side are really going to be more like subway purse snatching. It's just rotational trading, and that's fine. Or the other side of this is you're hanging out and along looking to squeeze out the shorts. And then you're just going to let the counter rotations run against you. That's the possibilities. Remember, the market goes up to go down, which is yesterday went up to go down today, and the market goes down to go up. It is possible that's hanging out long with your feet up, and a pina colada might be the best position to be in if that's your time frame. For other traders, it's rotational trading from either side or no trades because you don't have a plan for it. I mean, this is as complicated as trading is, and it's random. So this could still be a short to rotate or not. I know it may sound a bit ambiguous here because it's like, well, you're long or you're short. How about you could be whatever you want to be? If you have a trade plan and you can recognize your trades when they show up, this might be your short and this is somebody else's long in the trader lab. You see? Or you're just trading these rotations. You can do that also if there's enough range based on your trade plan. I find that if I'm going to be trading these trades, I'm always going to be looking at where was the other side active, which is in here, and I have to trade back towards these levels. So this is the same trade as, what all this is. Now, is that something you ought to be taking? That's up to you. Buyers are active here. Sellers were absorbed here. Now let's just see what happens. And it could do anything. And let's go back and talk about this. If we get under this high volume, which nobody knows, remember, this is our support, we can come out under here and do one of these deals. Now, that's what it might do. Not my thing, do anything more than what it might do. So I know if I take a short, my buyers are active here, you see? And my buyers are active here, and my buyers are active here. So what is that? Support. If I get a short up here, I'm just going there. I mean, this trade could just be from here to here. I don't know. Is that something you want to do? It was about 6-7 points. And if I get under here, I have the possibility to come here. So the way this trade might work is there to there, stop break even in case we continue squeezing because we might come out the top. Does that make sense? Questions, guys? If you're getting something out of this, please give a thumb up in YouTube. Remember, these streams are available exclusively to Bookmap Discord Trader Lab participants. There's no cost to be part of the Trader Lab community. There's a lot of resources and additional education, stocks, options, crypto, order flow with a high-tier tool like Bookmap. There's also a free subscription to Bookmap down there if you're visiting on YouTube, or even if you're in the Bookmap Discord Trader Lab and you haven't gotten your hands on this yet. You can download a free digital version. Comes with data. You can knock yourself out with that. It's nice to get your hands on something like this and to kind of see what's going on. Like any high-tier trading product, it's not a red light, green light. You have to actually understand what's going on, what the real world of trading is. It's not indicators going, buy, sell. That's what retail traders do. And as we know, statistically, retail traders do not have longevity, but we all have winning trades. If you close your eyes and push the button that said either buy or sell and you didn't know which one, you're going to have winning trades. And I coined a phrase for that. It's called Trader Groundhog Day, where you get winning trades, you go back, you say, I just got to make it better. And it turns out it doesn't have an edge, but it does have occasional winners. So we go back to the last big moves, like this morning, and we slam our indicators over there. So next time we'll get them. Is that you? That's Trader Groundhog Day. We've all done it because we think the market's going to repeat next time. Yeah, it does repeat. Unfortunately, with that one trade comes maybe 12 or 15 losing trades, and you have no edge with it. So that's not the answer. The answer is not in your indicators. The answer is understanding how the market works and then deploy an indicator when you know all the other pieces. Because when you know the pieces, the indicator becomes much less significant. In fact, it becomes, for me, I don't use any of them. It's insignificant because they're lagging, they're conflicting, and for me, this is the real truth of the market. Now, if I can interpret this, which takes time and education, I can then participate when I recognize the behavior. That's why when I break here, and I also break up here, which I won't know at the time, this is a potential short. But then there you're going, you see. So I know that. There's my high volume. Now, here's what can happen here. I can come out here and do this. And this is my high volume node. So this is now mean reversion in a fractal. If I can stay below here, I can come under here. If I can't get below here, then I can squeeze up here. That's what I know. After that, it's random. But that's what I know. So if I get short, and I don't forget what else I know. I know my buyers are here. So if I take a short here, I'm going here. If I take a short here, I'm coming back here. Does that make sense? So if I can't get under here, possibility is these guys are going to go to the happy hunting ground. So I have it's all laid out in front of me in the order flow. In the auction, understanding how the market operates is it's rotational. I mean, we can be on the bullet train and then we pause and we do this. Well, this is transitional behavior from a directional behavior to a rotational behavior. And this is in Trader Lab, you'd have a plan for this. You could have a plan for it, you don't have to. So I know is out here at the moment, and it's an alignment out here, is maybe too high. I know in the fractal, this is too low. I know if I can get below here, I can come to here, I can come to here, and I can come out here. I know if I can't get under here, I can squeeze these guys out and continue north. Is that worth knowing? Not what will happen, but where it might happen and what might happen and how to participate in it if this is your plan, I mean, I don't know if it's your plan. I'm saying is I'm just showing you how trades work. You can decide if you want to operate in this. It would be from here to here or from here down to here, you see. But you also got to know what happened here. So you need to be reading it. Now, what's your indicator tell you? I don't know what it tells you. I don't use them, so you can tell me. But this is really what auction market theory is. Understanding market mechanics, understanding order flow, understanding how the market works, not predicting what it'll do, knowing where it might do it, and knowing why it might do it, and then knowing where it might go because of participant behavior, because of this. That's why we are coming here, in my opinion. This is VPOC migration. That's saying everything below us is too low. So right here, if we move off of here and push high, this trade is over. Right here, I have sellers, and we got to see if the buyers, right here, very important. So if I'm in a short here, I'd be risk neutral. Now, right here, if we blast off, I'd hit the plunger, the canopy blows off, and that'd be over. If I break under here, then I'm still in the short. But I know I have a problem right there. You would know that also. Are you guys tracking? Can you just see how you might narrate the market? Doing what I can. How we doing there? Is our audio okay still in the Discord? Okay, thanks, Lucky. All right, I know that there might be a little hiccup. If any of you guys ever lose audio, just do a refresh in Discord. How we doing in YouTube? Appreciate you guys visiting today. Please give a thumb up if you're visiting in YouTube. Remember, this stream is available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, review, screenshot, circle arrow, and build out your trade plan. Also, there's 60 PDFs of structured trades that are available to you. Order flow. These are trade I was in. I was short. And what do I see? Pulling here, raised it here. This is an algo, bracketing algo. I was sitting short. There's my exit. And the market exploded up. Order flow helped on that. And I wanted to show you that. Just, it's a change in liquidity. This is what order flow is about. And of course, other trades, this is live trading. And when I did these, I'm not a vendor. There's no course. I share what doing this going on 45 years, both professionally and like you guys. If you want to, by the way, access Discord, there is the link in the bottom of YouTube. You need to verify your email address to make sure you're not a spammer and all that kind of stuff, which is for your protection. So here we are. We're back here again. So there's the short's over, okay? But I wanted to show you the narration. It's not, and you could do whatever you want to do. But what I try to do in the Trader Lab is the goal for me in the Trader Lab is to help developing traders differentiate their outcomes from other retail traders. Everybody thinks it's the same. Let's get a software toolbox. We got 150 indicators. Oh, it's wonderful. I'm going to spend my life trying to find the right mix of indicators and time frames. What makes us think that the answer lies there? Why? Because why else would they give me all these tools? My question to you is, why do they have 150 indicators in a trading toolbox? Why not just the 4 or 5 good ones? Why is it your mission to try to figure it out? And that's what we do until we run out of resources and time, and end up in the same place as everybody else has walked in our shoes. Now, obviously, there's going to be traders who do that that are successful. Do you know any? And I'm not saying it doesn't work, but I will say that's what most retail traders do, and they don't have longevity. So maybe something to consider at least, and I'm not saying this is you, consider what you do. Ask yourself, is it what your competitors are doing? And is it realistic to expect a different outcome using processes that might not fit this business? Because it's not an indicator-driven business. It's a participant-based business. That's why order flow is so important. It gives us insight into what these participants are doing right here. We got a buyer here. We got a buyer here. Sellers took over here. We have buyers here. The sellers are there. So, and we're thinking, don't forget what we think here. Possibility exists to take out the high here, not a recommendation. Or, let me give you the other part of or rotate back here. So there's 2 possibilities. Continuing to squeeze the area. Remember, market goes up to go down and goes down to go up. We certainly went down. And the stops are over the high of the day. Possibility we're going to take out the high of the day, not a recommendation. In the meantime, we can look at microstructures and just try to narrate. You'll notice buyers are absorbing the sellers. Buyers are stuck here. Sellers got absorbed here. Sellers are here. Buyers absorbed up here. What happened to this seller? The buyers are here. The buyers are up here, selling iceberg. So let's watch the behavior. Micro high volume is done. Now, these aren't shorts. These are just behaviors. If you're in the trade, and this would be the target, remember? So this is called mean reversion. Now, these are not trades. I don't recommend trades, but if you're in TraderLab, this might be a trade you would take. Why? Outside in mean reversion trading. Are you guys tracking? Now, it's not a trade anybody ought to take. Just because I see a trade here doesn't mean I would take a trade, unless it's in my plan. Why does the market come back here, by the way? Mean reversion. That's the mean. So the trade, so you have to be really good at execution. Now, here's the other piece about execution. If you cannot enter because of this, you don't have a trade. You just go, oh, that was nice. Next. But that's the mean. This is called outside in trading, specific trade plan. Hope you're getting something out of this. Remember, part of a trade plan is going, where's my trade? It might have been here. You could be taking shorts here and getting abused. That's why I don't like mean reversion, abuse. And once it does this, I have no trade. Why? The target's here. So if I come back up here, I want to be looking at behavior at this high volume area, not a trade recommendation. Because, let's come back, what happened over here? Buyers took over. So the buyers that were here are here. Sellers were over here. So the possibility to come here, this might be as low as it goes. Now we have to see what happens on the retracement. My resistance is up here. My support's over here. As Dirty Harry would say, do you feel lucky? So the possibility is back here, short to here, or nada, and come up and squeeze out these guys. I don't have any opinions because I can't call trades, and I just am sharing ideas here. Time is up, guys. Hope you got something out of this. Please give a thumb up in YouTube. Remember, if you want to visit the Trader Lab, there's a link in the bottom of YouTube. You can access the Trader Lab. There's no cost. Just need to verify your Discord username and email. And then you're welcome to download the 60 PDFs of structured trades. Download the statistics. You have to vet everything for yourself. The Trader Lab's a community of traders. It's about building out a trade plan, the business of trading, understanding how the market works, why it does some of the things it does, and how you might get in alignment with it. Thanks again, guys. Please give that thumb up. It helps the stream. Appreciate you visiting Trader Lab. And remember, this stream is available to review exclusively to Bookmap Discord Trader Lab participants, plus all the additional education in the Bookmap Discord server. Thanks again, guys. Look forward to seeing you soon.